And we are live. What's up, everybody? On day 3 of this evaluation from TradeDay, we started at 50,000. We're back to almost breaking even after being in a drawdown for 2 days. But let's get rid of the boring stuff first. Disclaimer, the content presented in this video is for entertainment and educational purposes only. The views and opinions expressed are solely those of the creator and should not be construed as financial advice. The creator does not sell any products or services, nor is affiliated with any of the trading platforms or tools mentioned. Trading involves risk and is not suitable for all investors. It is important to conduct your own research or consult with a professional before making any investment decisions. The creator assumes no responsibility for any losses or damages arising from the use of this content. So today, guys, I gotta tell you something, because you might be like, what the heck, man? How come you got more money than yesterday at the end of the day? Well, I was able to catch a trade, and unfortunately I wasn't able to stream while that trade was happening, because I wasn't even going to take the trade. I was just kind of preparing for today, and I was going over this schematic, making a lot of zones and stuff in preparation for today. But as I was doing that, I noticed, this area here that we wanted to check out yesterday. Yesterday we kept talking about price going down here, and 50% of this big move, I was thinking that it would yield us a push up, maybe even break of structure, kind of a trend flip to the upside, and turned out to be a really good place to take a trade. So as I was doing that, I saw price hit this, and I took a trade, and I was able to record it. So let me show you guys the actual trade. So this, like I said, this was earlier today, but like I said, I was doing this, it was 10:42. Right now it's actually 11:37. So a little less than an hour ago. As you can see, I was checking out the chart, and I started recording because I kind of had a feeling that I was going to be able to take a trade. This is the area, this move from here to here, what I'm sketching right now. I was thinking that 50% of the area would yield some reaction, possibly to the upside. And lo and behold, because as you can see, well, I'm gonna fast forward a bit. I kind of kept watching and stuff, and then I was looking at this is the 20-second chart, and I even moved to the 10-second chart to see if I could see more signs of a break of structures to the left. And I think this is where I took the trade. Let's see. I saw this drop, and then I saw it drop up to about 50% of this range here, and I thought it would be a good idea to long the market here. And as you can see, I'm ready to place the order. Our balance is 49.79, like we left it yesterday on day 2. And I kind of was just looking out to see if I could get a trade, and I think this is where I put the trade. So let's see what happened. I got about 50% of the area. I saw that candle push up like that, so I took the trade. I went for 7 points because I thought it'd be a bigger move. Now, if I was an experienced swing trader, I probably would have put my stop loss down here and gone up for a higher, just wait for the order. However, given that I'm only taking a few points and my stop loss is not behind this, I was willing to break even, if it didn't pan out my way. And you'll see me move the stop loss to the break even area. But fortunately, the price didn't go to my stop loss. It actually went and took my target of 7 points. So a very good trade, a really, really good trade, especially because of what happened. So that's enough of that video there. But I'm glad I caught it so I can show you guys what happened, on that trade, even if it wasn't live. So now that that happened, we can take a look at where my trade was. I believe I put a mark on the 20-second chart here. Okay, well, here it is. So this was my trade, this line here, I put this line. And as you can see, we're trading higher. And I was actually really hoping to get back here, to start trading again, to be able to catch this move, which I believe is probably going to trade higher now because it's 50% basically. Well, it's an area of interest, not 50% exactly, but it's an area of interest for us from this low to this high here, which is the drop that gave us that break of the high. Price went back to about 50% of the area, a lot less actually than 50%. Not a lot, but like 38%, 40%, something like that, because 50% would be down here. Yeah, maybe around 35% drop. So we may not have caught it, but of course we'd be looking at longer and shorter time frames. So here it is. Actually, it aligns perfectly with 50% when you look at the 1-minute chart. And of course, in the 20-second, we got so much more candles that it's harder to tell which is the high that we care about. And if you can see here, I mean, it's dead on 50% of that swing point here. So I'm really happy about this trade. This is the kind of setups that we want to take. We kept talking about yesterday how we wanted to do exactly this. And look at that. Like if I had waited, I would still be in profit right now. Possibly, looking for a lot of profit. But of course, like I said, I'm a rookie. I'm not taking those kind of swing trades yet. I am trying to pass an evaluation, and I'm going for the slow and steady wins the race kind of approach. This would be great because maybe we could have gotten, such a good trade that we are now in profit. But, now we have to wait for our next setup. Unfortunately, that's the downside of scalping. But as you can see from this trade, that as we get more experience and stuff, we're going to be able to take more from the market. Maybe not all the way here. We're not, it's going to take time for this kind of skill to develop. But at least here, I mean, like 3 times, 4 times the profit that we actually took with very minimal risk. So again, this is what I was doing earlier to prepare, and it just turned out to be a really good time to trade. I kind of don't like to do that, if I'm just doing something other than trading, like sketching, then I don't like to take a trade because then it could be I could get into trading and forget what I was trying to do or accomplish, and then if I lose, that's a bad discipline. Breaking rules, breaking your own rules kind of thing. So yeah, I mean, still on the 10-minute chart, I mean, it's a lot clearer that this 50% of this drop here, again, on this longer time frame, it even looks like more than 50% was mitigated here from this high to this low. So it just depends what time frame you're looking at, whether it's 50%, 30%. But again, it's 50% of this big drop. Of course, we're on the 10-minute. So what happened on the left is a while back, but it still kind of makes sense to us in this scenario that we're looking at here. So again, this is why I took the trade. I actually thought it would go down a little bit. I was expecting it to come down a bit. But once I saw that price was kind of like shifting in this precise area, I looked at the lower time frame, got a bit of confirmation, and was able to take a trade up. $140 is not small, right? I mean, it's a good amount of profit. So we also need to be kind of humble and appreciate those small wins, even if we could have gotten a lot more profit. But so right now we're running this high here. We're aiming to break these highs. If that's the case, this this area would be considered mitigated by this. So we could expect price to trade higher and then revert to something that's created later. So we'll see what happens. We'll just have to see. But what could happen also is we could break this high and then go back to about here and then trade higher, or it actually might still want to come down more. We never know. It is looking like a bullish flip. However, there's a lot of bearish action here. Now this area was left unmitigated by this drop here, the break of this low. So now the 50% of the area here, let's say from here, to here, because that's, price came back to mitigate some of the area, but not, well, not what, let's see, not, I mean, if you want to consider maybe the drop here, because that was this high here and this low. So this high here, let me show you. This high here created a new low kind of thing, like it dropped from this last high. Sorry, it created a new high. Sorry. It went downside and then tapped, kind of had a support level. This is where we were trading yesterday, actually. Well, we were trading over here. Never mind. We weren't trading at all here, but, and in any case, so there's this range created back to about 50% of the area. Okay, give us a drop. So this is all mitigated. However, this drop from here, let's say from here to, let's say, here. Now this even though it was close, this was left a bit unmitigated here. So that's where I think price may want to push up and then trade down from. That could take a long time though, even in the 1 minute. I mean, it's still a long time. I also want to mention our kind of, what do you call it? When you want to foresee the future, what we thought would happen, right? But it's, I think I lost it. Gee. Maybe it was in the 1 hour. No. But in any case, let's take a look a little bit about at the 1 hour. We have that double bottom. Price is making higher lows. So this might be the place where we shoot up from to make a new high. We're still kind of bullish in the overall 1 hour market. This high here is also interesting. That this might give us a rejection down when and if we hit that area. But that's an hour chart, so well, we'll see. We're very interested to see what happens there, because as you can see here, bearish, here, bearish, here, bearish, here, bearish, here, bearish. Here, not so much. Kind of bullish here. I mean, just kind of going through the area. But this might be also a wall that takes us down. The next low to be ran is the one that we just created. This is where this is where the market opened. Right. Yeah, right. In the middle of this candle, because this is the 1 hour, so about half an hour here. So as price opened today, it went up, running some of the highs here, definitely running this high. Not really much of an imbalance left. Well, there's an imbalance left here, right here, and there's a bigger one over here. So about the middle of this imbalance is what's bringing us lower now. I use white because yellow is more for breaks, to consider breaks. There was a break actually. This is kind of a break, so let's do this. Yeah, let's leave it yellow because there is a high here that was broken, and there's no other highs here that we might get interested in. Maybe this one. Let's see. Yeah, well, of course, all the way here, right before the high before this imbalance was left, this manipulation. So I mean, this could be a spot to trade up from, unless we're going to make maybe a bigger wick here, maybe break the lows, and then trade higher. Because we only mitigated up to about 50% of that interest area that we had, which is on the 10-minute here. So this is being mitigated, but maybe we are going to trade a little lower, maybe here in this area. I'd say it's a little likely to give us a push up. So this area we might consider a little bullish. No, it's too green. Can't even see it. So we can consider that. Oh, that was what? Okay, so we can consider this area a bullish area if price does get back down there. This, of course, being our origin demand zone. And right now we're in this zone that I kind of was sketching before some of this stuff happened. I was sketching this area. Which is where I think we will trade for some time, which I mean, it's kind of happening. So I'm kind of assuming that we're gonna stay around here if we're going to be consolidating. This purple line being about the range from here all the way to here, of course, a big range. But if we want to narrow it down, we got these two ranges, the gray one and this orange one. Got this demand zone pushing price up. This break of structure here that happened over here where price, what happened? Let's see. Maybe it was down here. Yeah, I think this might be the break of structure that we, oh, maybe to the left. Well, I don't know why this line, this yellow one, is there. I'm trying to figure it out. Because that usually means break of structure, but yeah, maybe it was just all the way here where price broke this high here and these highs. So yeah, maybe it's a more recent break that I was thinking about. It did bring price down here. So now definitely if we push up all the way there, it's going to be interesting. Maybe we'll get a short from there. I don't know how long I will stream for today. We'll see. I definitely am happy about getting back to our break-even area. So if I can just not lose a ton today, that would be great. That would be a really good day. Because even if I leave home with this, I'm still happy. The longer we are on the evaluation, the better for us, because we are improving. The more we trade, the more chances that we pass it. You know, the more days go by, because we can have a really good day. And so long as we don't lose the evaluation, we're still trading. We do have some data released today, or some kind of event. Let's see. Yeah, this one. So the EIA report. But it's energy traders, so it doesn't really apply to us trading the NASDAQ. So now if we're going lower from here, which I'm not expecting yet, I'm not expecting to go low here, especially with this break of this low, of this high here, this one. So we're trading higher. We might be running all the way over here. Maybe here we get a rejection down again. Maybe expecting a shorter drop before trading higher. Our opportunities, of course, this one, the one we actually took, was awesome, amazing. And then this is a really good opportunity as well, because now we use 50% of these 2 points, giving us exactly an entry there. So this would have been a great trade. I was getting prepared to stream and stuff, and I wasn't able to trade there. But we're not afraid of missing out, because this happens all the time, and it happens both on the downside to the upside as well. So there's a bunch of opportunity. We just have to be patient, and thinking that we miss out is not, it's not an efficient way to think. It won't give us good results to think that we're always missing out, because then we'll rush. We'll take trades that we don't have an edge on. Yeah. I did look at the I think it was the 5-minute indicators that we have, and I did, yesterday we were talking about indicators, and right where I took the trade, which was, yeah, right around here, I saw, I did take the trade based on the 50% stuff, but then I did notice that there was a cross for the MACD crossed over the signal. So that was a good way. I guess it was just good to see that what we read about the MACD crossing the signal, giving us bullish indications, was, dead on. We had a crossover here, which did not really give us higher highs. I mean, this is definitely a move up, but considering how big the cross is, how far away the lines were before the cross, we would have thought that maybe here we were gonna go higher. But then of course, price traded lower, so that was short-lived. The MACD went down below the signal, but then immediately went above it, and that's what's creating, this bullish action. This could be another scenario like here, where we go here, 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 here. Now we go here, 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 maybe lower. So not really completely bullish yet. However, that area we were expecting to give us a bullish reaction, more so than the one before, because of basically the market structure, swing points that are to the left of our order. And if I'm sounding too complicated, I'm just meaning this swing point here. Yeah, here, from here to here. This is a swing point to the left that was left unmitigated. So we did mitigate it 50%, exactly where we expect price to shoot up from. Doesn't mean that price is not going to go a little lower, maybe to 65%, 60%, and then shoot up again, or maybe even go lower even, and mitigate some of the areas that were left unmitigated back here. Back a long time ago, we left this area unmitigated. Price never went lower than this. There was a little mitigation here actually. This candle definitely tried, but it wasn't even 50%, it was like 20. And then here we did finally, we got this area mitigated. Yeah, this is the real mitigation of that area. Price traded higher from there, um, giving us not new highs, but now this area, this 50% of the swing point from here to here. Okay, let's see that one actually. Um, let's see. Let's see, here to here, and then 50%. Okay, yeah, so that's again another, it's kind of basically the same as what happened here. If you think about it, this is kind of very similar high to this, and this is very similar low to this. So just a bit more narrow, just kind of like, you know, narrowing down a bit. But in any case, we're still going up, kind of. All right, so I don't know if I mentioned or have talked about what happens if you get funded, like what really happens. And it's something I've read about it, of course. I want to get funded, so big rejection there. Gotta pay attention to that. Big manipulation coming up, so we might trade lower from here. Yeah, so I mean, I did research a bit about, wow. Nice. Nice. And look, my order. Look at my order. It's crazy. Crazy, 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 crazy. Oh man, we're gonna make so much money down the line, down the years. So yeah, so to get funded, you gotta pass the evaluation, right? That's what we're doing right now. But once you get funded, you get kind of options. You have the option to keep trading on a sim account that is a funded account of $50,000 again. We still have to follow all the rules except for one, okay? Except for one rule. Let's see. So if you look at the TradeDay's rules, they have consistency. Well, the rules are permitted times, maximum drawdown, permitted products. But also the objectives are not the same. You don't need this. You don't need, actually, none of them you need. Because once you get funded, this kind of go away. And now your objective is just to make the money, so long as you don't, break the rules. Of course, this is still a trailing, right? Maximum drawdown. So you still have to watch out for this. And with a funded account, let's say you make money, you have a balance that's going up. You can withdraw that balance. You can withdraw the money. But I'm still kind of like not sure about what happens to the trailing drawdown once you withdraw. And I think this doesn't change. So if you have a trailing maximum drawdown and you withdraw money, you basically have less money to trade with. So I gotta check out exactly how this works. But the good thing is that we don't have the consistency rule, which kind of indicates that you can only make 30% of profit maximum per day on one day. So because you don't have a profit target once you get funded, there's no 30%. So you can make as much as you can, or you want, or you could. And you get to keep it. It's a funded account, so you get to actually keep that balance. So that's really good, because it means that we don't have to be as careful. We can take trades like this and cash out, make some money. Now, once you hit $5,000 on profit, I think you are required to withdraw. And then you actually have to go to a live account, a funded live account, which now it's a lot harder, I think. I mean, there's definitely a bit of a different environment from a sim account to a live environment. I think just price moves a little more erratic on the live account, even though it seems like it's the same. I think that the sim accounts tend to produce, or sim trading is just a lot smoother. Let's call it that, a lot smoother. So it's a harder environment, and it's easier to just get, lose your funds, get destroyed basically. So we'll see when and if, no, not if, when we get funded, we'll see what we'll have to do with that, with the whole live funding or sim account, like, keep it on a sim account, which I probably would prefer, because my goal right now is to become a profitable trader. I don't really care too much about taking out money for myself. I mean, of course, that's the end goal, to make a job out of this, to make a career, whatever you want to call it. It's not like, to me, it's not a hobby. It's not like, oh, I'm doing this because I want to do it all day and it's fun for me. Yeah, it's all of those things, but basically I want to get paid. I want to make cash. And but right now I need to first make sure I'm in profit and I don't lose evaluations quickly, that kind of thing. So one step at a time. So I was gonna say, let's look at TradeDay's okay, funded traders. You will have a choice between a funded or sim account, and you can see the difference between the two. The same three rules apply, but they don't, but not the objectives. So the rules apply. So it's the same rules: permitted times, permitted products, and maximum drawdown. So yeah, you still have a trailing drawdown. When your trailing drawdown reaches zero, it will freeze there and no longer track your account growth. However, should you start to lose money, your account will not be allowed to go below the starting account balance. Okay, so it's the same thing as the evaluation. What else? All funded live accounts are subject to our slippage risk management. This basically what it says is that you cannot, and this is live accounts. This is not for the sim accounts, but for live accounts, slippage is where you get an order, you place an order, but you actually get a different price because of how fast the price is moving. So they don't allow very quick scalps, because you're trying to kind of cheat the system and use slippage as a form of unethical type of trading. I don't really understand exactly how, but we'll take a look at that later on another video, actually. If you choose to fund a live account, you are trading our money, so you are considered a professional trader by the exchange. And as such, you will not now be responsible of your own market data charges, so you have to pay for market data, $135 a month. So that's another good thing about the sim account, funded sim, is that you don't have to pay for this. When funded, we will stop charging you your monthly membership fee, and you are free to continue to use the resources of TradeDay member site at no cost to you. Oh, that's cool. I didn't know that. So they're not going to charge me that monthly fee that I pay now that I'm trying to pass. So that's nice. So just wanted to see if the objectives and rules to qualify for funding. funded traders. You are placed in a simulation. After you set up, okay, whatever. So basically they're telling us the difference. We just kind of read about that. I just wanted to see, okay, here. Both accounts carry our great payout policy. No restrictions on the frequency of withdrawals. However, there is a minimum withdrawal amount of 500. The trader profit split is 100 for the first 10,000. 100%. Okay, so the first $10,000 you make, you get to keep 100%. Oh no, so you get to keep 90%. Okay, the trader profit split is 100% for the first 10,000 and 90% thereafter. Oh, okay, that's nice. So 100%, I think this used to be 90% and 80%, if I remember correctly. Maybe I'm thinking of another prop firm, but 100% of the first 10,000. So if we make $10,000, we get to keep all of it. And then after that, we get to keep 90%. Okay, here, if you choose a funded SIM account, you can earn up to $5,000 in profits before we move your balance to a funded live account. So this is the most you can make in a funded SIM account. You can take payouts at any time, and we will transfer the remaining balance after payout. Okay. Or for the transfer. I don't get this. Note that any profits in excess of 5,000, oh, okay, in the funded SIM account will be excluded from payouts or for the transfer to this funded live. Oh, so you kind of lose. You lose this money. Wow. So look what it says. It says, note that any of the profits in excess of 5,000. So, okay, so let's say we made 6,000 on the SIM account, right? We're on a SIM account and we have $6,000 in our account. Of course, 50,000, 56,000 basically, because we have 50,000 to start with. So let's say we have 56,000 in our funded SIM account. But when we withdraw, they'll give us 5,000 and we will lose the 1,000 because it says or for the transfer to the funded SIM. So we got to make sure that we withdraw before hitting 5,000, you know, so that we're not going to upset that we didn't get enough. But whatever, you know, we're still making the 5,000. You may be invited to move over to the funded live account before making 5,000. Okay. The trading balance after any withdrawals. Well, yeah, but I don't know. This kind of contradicts a little bit of what they said here. No, well, any profits in excess of 5,000 in the SIM account will be excluded from payouts or for the transfer of the funded SIM live account. Yeah, I mean, so they're not going to give us that $1,000 if we're over. If you choose the funded SIM account, okay, wait, where please note that any profits and deficits will be excluded from payouts or for transfer. Oh, it's saying the exact same thing here as above here. So you can withdraw from the funded SIM account as you make profits. The 5,000 level, which you are moved over to the funded live account, is calculated on the profits you have made in total. These are your total profits in your trading account, including any profits that are withdrawn. So once you withdraw, you still have the profit in your account. Only the net profits will be transferred over to the live account. Oh, the net profit, I don't know. Okay, so let's example. A trader has earned $5,000 in the funded SIM account, gross profit. During his trading, the trader has taken a payout of $1,500. Okay, so this is their balance or their earned gross profit. And then they take out 1,500. So the gross profit is 5,000 because they still have made this money. And the net profit is 3,500. Only the net profit will be transferred over to the funded live account. Okay, so there's the answer there. There's the answer. Is whatever your payouts is, that's, you know, the remaining is what will be transferred to the live account. Okay, so in that scenario, I guess you would still keep the $1,000 that we were talking about, but not really, because 5,000 is is less than 6,000. So I know it's confusing, but in this scenario, the trader has taken a payout of 1,500. So I think this is a better scenario for us, where we take a little bit of the profit. I see. It's like when you take profits, your account balance doesn't change. That's what I'm thinking that's going to happen. So then the remaining, the net, or whatever they call it, the net profit, is what's added to the live account. But while you're in the sim account, I guess your balance doesn't change when you withdraw. You're still at the gross profit balance. Something interesting going on here. Maybe we can, you know, take a second to see, because we did run the highs and even broke them. Let's see if we broke them. Yeah, we did break them slightly, but we did break, especially well here. Wow, barely. That's crazy. That's crazy. So, you know, my bias is still bullish. This is probably a good spot to leave from up. I'm gonna wait a little bit though. Maybe we run these lows. Let's see what's happening on the 10-second chart. Maybe we get a clearer indication as to whether we're gonna be flipping to the downside or not, or to the upside actually. Well, right now we're going down, flipping to the upside, but the trend would still be down. So this is a low that we're interested in. So yeah, well, I mean, what I'm gonna do is I'm gonna get funded, and then I'm gonna make $5,000. Then I'm gonna put them in my bank account, and then I'm gonna trade a live account. I'll be considered a professional trader by TradeDay, and we'll go from there. So run of the high, that's a bit of a, you know, break of structure sign that we might go higher. If we look at a protected low, I guess would be, well, it would be this one, but it got price ran through it, so we'll consider this one. But basically the protected low is all the way down here. That's yeah. And since this area was mitigated, you know, we still probably could go lower here eventually, but we're getting pretty clean price action right now. We kind of know where we are and what the possibilities are. It's a big imbalance left here. Let's see what that looks like on the 1-minute chart. Yeah, I mean, fractal. So we'll definitely consider this area to be of importance. This whole range here might do something. And then about 50% of it is right here, right at that fractal. Ooh. Well, we got the run of the low, break of structure to the left of the low, going down. We're tapping back into 50%. Maybe this is where we trade lower from, especially since we didn't really break. We broke here. I'm trying to look for an important high here. Oh yeah, we ran this high here. So this high, because it's a green candle, we're gonna pay more attention to. Hasn't been broken or ran. Oh. Problems, guys. Right there. So yeah, price didn't tap there. So yeah, we might trade higher just to get back there, because this run hasn't been tested. I mean, this high hasn't been ran or tested. But maybe right now we might get indication to drop from there. Kind of weird because I think price is going up, but I would like to take a trade going down. So it's kind of a contradictory bias. But yeah, I guess I would just take a quick scalp just to make sure. But I do think there's some resistance here, especially double topped here. But we are making higher lows, except for here, maybe here, this one. Yeah, we could kind of like scalp down from here. Let's see what happens in the next couple of candles. It's only 10 seconds, so it'll be quick. We might get a quick, whether we run this low or run this high. Yeah, I mean, I would expect price to come down here at least. Not sure enough to take a trade. If I do take a trade, it's going to be a small one. Probably 3 points would be good. Quick price action going on. Well, we have a run, so yeah, I'm not going to take the trade because we ran the highs. We'll see what this next high here brings us. But no, I mean, yeah, like I said, I have a bias that is going up right now. Of course, it looks kind of more clear than the 1 minute. The 1 minute looks a little more bearish. But on the 10 seconds, it looks a little more bullish. Yeah, we could have gotten a nice 3-point scalp, but no, I mean, sometimes right after it runs and breaks the high, especially when it does it quickly, that's when price starts to break lows and moves kind of quick, especially on the downtrend. You see, that's kind of a strong, yeah, you see that strong reactions. Look at that run of the high, you see? That's exactly what I was talking about. Why? Because it ran all this and broke all these highs here. So sometimes you get like a strong reaction down. It didn't get all the way down here, and we're still going higher. So could have been a good scalp up, but we're not sure about that because of, I mean, we're not sure when it's going to be done going up. Definitely this is probably the real high that we want to worry about if we want to consider a bullish flip. Yeah, I was thinking, did I say the right thing? I don't know. But I hope you guys are having a good one, you know what I mean? Like, you know, you know, because I have no viewers yet, I don't know exactly what to talk about because I'm just talking to myself basically. So it's hard to like for me to talk about something without anyone caring. That's why I kind of babble on and about the same things. But eventually, once I have viewers, maybe I get some feedback and then talk about what they want to talk about. My opinion, I guess. That's what the YouTube channel is all about, right? Ranting. So yeah, we're getting a strong reaction from this area. Actually, I kind of like this on this 10-second chart. I kind of like this high here, which I hadn't noticed. I was noticing this one, but yeah, this one's, I mean, they're kind of exactly the same, actually. Almost. Maybe a tick or two less, but, and then this low here, of course. So this is our range right now. This is our range. So we're at the top of our range if you think about it. But of course that could change. We could just keep running, breaking highs. Our range would definitely become something else. But for now, I think we're at the top of our range if we're going to be trading lower from here, which I have a feeling we will. Lower maybe to here, only to 50%. Mitigate this area again maybe. Especially with this imbalance left like this. Yeah, price has been taking all these orders. So it might not want to come back and stay long. Maybe it just comes back and quickly returns or just goes straight down. I would have, well, maybe there's volume here that hasn't been picked up. I mean, and it just started to do so with this action here. And so you might want to start doing it again and mitigate this area more. There's more volume here than there was before. Look at this. There's nothing in this price point except for all the way back here. This being the 10-second chart, this is not that long ago, of course. This is only a couple of hours ago. But yeah, you see that's creating some resistance. Ooh, baby. Yeah, I'm not gonna sell here. I mean, that was a real big push up. Wow. So now we have, well, we're gonna keep this area because we might get retracement back to the 50%. So about here. But we have to wait to see, maybe we get the rejection from here if we don't run these highs here. And it's hard to consider what's going to happen on such a small time frame of 10 seconds. This was left unmitigated, imbalance here. Well, not really imbalance. No, never mind. There's no imbalance here. There's an imbalance. No? Well, here, yeah, here. This candle. Small imbalance. This would have been a good sign that price was going to flip with this big imbalance left, big drop. And then trading higher here. Maybe we could have an entry here. That would have been a good entry. No drawdown. Look at that. Look at that. 20-second chart. We still have our range. Oh, you could consider this the 60-70% of this swing point. See that? Yeah, 70%, 75%, well, a little more, like maybe 78%, 76. That's where we got pushed up from. Now running and breaking the high. Yeah. And look at my order, guys. I mean, I'm not tooting my own horn or nothing, but look at my order. I bought here. I went long. Would have, look at this. How many points is that? I don't know, a bunch. 96, 396. It's like 100 points. 100 points on my buy. No drawdown whatsoever. Zero drawdown. Some sketchy moments, right? Sketchy moments. But here, especially, oh, we got to sell here. Probably would have sold here. I mean, if we're experienced, maybe sold here. There's a bunch of reasons to sell. But if you know what you're doing, boom. And that's why I'm more, yeah, you see, now we're getting the retracement. After breaking, right after breaking, then we get the reaction. So yeah, now we can expect to go down to 50% of that, of the swing, or maybe this is just as a quick move down before starting moving higher, even breaking these highs. Wow.